All right, welcome back to Market Day Report. I almost said Commodity Wrap Kickoff. Boy, oh boy, too many shows in this small brain of mine. But thanks for tuning us in here. But you know what? If you want to stick around to the top of the hour, 1 Central, 2 Eastern, that's the Cow Guy close. So you can let the clock do the walking. You have to stay right where you're at. And we got another great show lined up. Our guests are all on the other finance networks. You've probably seen them. It's an all-star lineup, and we've got great things to talk about again here today. Really excited. I'm having a blast. You should kind of come watch the show if you haven't already, but it's gaining some steam, definitely. So we'd love to have you around. Let's go again, 1 Central, 2 Eastern. Now, if you can't DVR it and you can't watch it, we put it on the radio, and that's Rural Radio, Sirius XM, Channel 147. And we give you a bunch of different times to watch or listen to it. So you can listen to it at, say, 5 p.m. Central, 6 p.m. Eastern. And then if that's too much in the dinner time hour for you, we put it back on at 9 p.m. Central, 10 p.m. Eastern. And if that's not late enough for you, who knows? We put it back on again at 2 a.m. Central, 3 a.m. Eastern. So we give you 3 places to listen to it, 1 place to watch. Watching's probably a little bit more fun. You get to see the jacket. But we'd love to have you there. All right, so that's the Cow Guy Close. 1 Central, 2 Eastern, right here. Let the clock do the walking for you. All right, let's take a look at these markets. We'll start with corn. How about that corn? We've been about a nickel lower all day today. We're only 4 1/4 cents lower now. 4.78 1/4 last. We're 4 cents off the low. That's March. July is down 4 1/4 cents to 4.97 1/2, and that's 4 cents off the lows. While D-Set's down, new crop down 2 3/4 cents to 4.68, and that's 3 3/4 cents off the lows there. So that's corn pretty much straight across the board there. Anywhere between 2 3/4 cents to 4 3/4 cents lower. Let's go to the soybeans. They too are lower. Once my technology flips over, there we go. March is up 1/2 cent to 10.29 1/2, but as you go out the defers, we lose a little bit of real estate. Nothing major. We're only off 3/4 cent in May to 10.46 3/4. Again, that's about 9.5 cents off the low of the day. So we've definitely come back from the precipice there. That was May beans. If we go out to Sep beans, that's 3 1/4 cents lower. 10.45 3/4 is last. 6.5 cents off the lows. We can call that, what, 9 cents? Not quite. 8.5 cents off the highs. There you go. Let's go from beans to the wheat. Chicago wheat down 7.5 cents in March to 5.71 1/2. May's off 7 1/4 cents to 5.86 1/4. Go all the way out the deferred to D. That's off 6 3/4 cents to 6.35 1/4. And that's about 4 3/4 cents off the low of the day. 9 cents from the highs. All right, that's wheat in Chicago. Let's take a look at the hard red in Kansas City. 5.5 cents lower in that March contract. 5.91 is last there. We've got July off 4 3/4 cents to 6.17 1/4. And we're 5.5 cents lower in the old D's contract. That's Kansas City hard red D's. That's off 5.5 cents to 6.49 1/2. All right, let's move right along to see what the spring wheat's got for us. That's a lower board. 9.5 cents lower in March to 6.12 even. We're 8 3/4 cents lower in July. 6.40 1/2 is last there. That's just a tick off the low of the day. This is trading heavy. D sets down 6 1/4 cents to 6.67 3/4. We'll get to the cotton. We'll go to our guest analyst. Cotton's down 43 points in March to 66.08. While May's off 53 points to 67.35. Let's bring in our next guest analyst. He's batting cleanup today, Mr. Ted Seifried, Zaner MarketCast in Chicago. Ted, thanks for coming on. Anything jump off the pages there at you?
Well, Scott, I've always thought you had a rather large brain for a bovine, so I don't know.
Probably.
Yeah, look, corn's down. A lot of people will say it's because of what Representative Massey had said about ethanol. Really negative, saying it competes with food. Look, the ethanol industry is going to take that to task. We know that. I think that's why we're under pressure in corn. I think this is more, first of all, a risk-off event. And when you had funds as long as they really ever had been at this time of year, when that means risk, when we talk risk-off, that means getting out of long positions. And I think we've seen that effect in corn very much so in the last 3 trade sessions. I'm also going to say we're taking some weather premium out of the market. Look, they've caught up on that Brazilian second season corn planting. There's still some risk at the end of that growing season. There's still some risk from the long-term weather models looking a little bit dry. But it's not as dire as it seemed a week or so ago. So there's a couple different things going on there for corn, I think. Not a good look for wheat, breaking sort of the near-term shallow upward trend line. But it is off its lows, so we'll see how we close. And the one that makes me kind of scratch my head a little bit is soybeans regaining the strength. I guess to that you could say, well, it was ethanol that was singled out and not for one. And for two, the funds haven't been really very long on the soybeans. So when you talk about risk off, soybeans don't get the brunt of the pressure. Also, certainly a lot of talk that, maybe there could be a trade deal with China. There's that optimism in soybeans, and also the idea that we're not going to plant nearly as many soybean acres as we have been.
Right.
So lots of things going on today, but risk off, I think, is the name of the game. And it's really most affecting the corn market.
Yeah, and it's not just us, so there's a lot of risk off going on all over the place. So we shall see. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with Mr. Ted Seifried, Zaner Ag Hedge in Chicago. We'll be right back. All right, welcome back. This is where we do the livestock, right? This is what you've all been waiting for in the cattle market for sure. Let's bring up a cattle board. I did that over the break, live cattle, and let's bring that up, and we're going to see we're steady to a little bit better here. We've got an April board up 65 cents to 195.75. June's up 87 cents to 192.27. October, that's up 97 cents to 193.15. Steady a little bit better. Live cattle. The feeders were up about $2 across the board, but we've kind of given back a little bit, but we're fighting to make that happen again. March is up $2 even. 274.30's last there. May is up $1.82 to 272.17. And then finally September, that's up $2 to 274.62. Lean hogs, let's see. April's down 92 cents. We'll go there. 86.47's last there. Dime off the lows of the day. May's down 97 cents to 90.52. A dime off the low there. Let's go all the way out to defers to August. That's down $1.10 to 99.62. That is on the low of the day. All right, let's bring him back in and see what he's got to say about it. Ted Seifried, Zaner Ag Hedge. Thanks for being on, Ted. I don't know. What jumps off the page there? Anything?
Yeah, like you said, make feeders great again. It's been quite a last 2 days for the feeder cattle market. Another case of screwworm found in a Mexican state. So we're wondering if APHIS is going to shut down the border again. That's obviously lent quite a bit of strength to the feeder cattle market, and the live cattle have been following. However, there's still a lot of tariff talks. Our tariff in Canada going to go in place over the weekend, and how does that our exports in particular to Mexico, of course, they're the big player. But also, what does it mean for retaliatory tariff, or what does it mean for imports of animals? So a lot going on there. Either way, it's been a really nice 2-day recovery. I think my bigger concern is the overall economy and the risk off that we're seeing and what's happening in crude oil and Bitcoin and gold, the equity in our markets. And if these things are signs of come rather than just a very quick flash crash correction, I don't want to use that term. Correction, that's the term I use. I think I have to be worried about what our domestic demand or global demand is going to be for a lot of high-priced proteins as a whole. And I think for me, that's the overriding. I welcome the strength that we're seeing. I take it with a bit of skepticism.